Now for a look at the other trading on the local market. Earlier I spoke to Marcus Padley at Patersons Securities. Marcus Padley, it's the last week of the financial year. Was today a day for window dressing?
If it was, Chicky, the window dressers aren't doing a very good job, I have to tell you. The market was down today and we were sort of expecting a bit of a flat day. And the volume's quite low. There's not a lot of news around. We've had 2 weeks bereft of news. And we have seen the market down over 200 points in the last 4 days. So no window dressers at the moment, I have to say.
You had a teeny bit of excitement, though. There was a spectacular glitch, wasn't there?
Yes, a bit of a laugh, that one. We had the ASX 200 index went up from 44.25 up to 5,012 in a split second. That was up 13.4%. And rather than being due to some cocked-up trade or trading error, the flash dash, let's call it that, came about simply because of a ASX data feed. The wrong number came through on the index, so not really going to disturb the score, I don't think, at the end of the day.
So no fat finger in the midst? No
fat fingers this time.
And how did local banks fare after G20 decided to allow more time for new bank rules on capital and liquidity?
Well, not terribly well, actually. Bank sector, since top of the market on April the 15th, has been down 17% against the market down 12%. Some of the banks as well are down 22%. Macquarie, which had a bit of a sort of mild profits warning last week's down 23%. So the banks aren't faring very well at the moment. The G20 was actually reasonably good because, as you say, they've sort of delayed imposing some sort of bank levy to cover against bailouts and sort of allowed countries to go their own way on coming together on stability measures for the banks. Having said that, there was a major broker last week who had downgrades on all the major banks and another one who declared the sector to be ex-growth. And also warned us about the number of capital raisings that will continue to hit us from the major banks. And it's glass half full stuff. There was other research around today saying we should be shorting banks, and you can start piling on stuff about loan growth margins being as high as they've ever been. Everyone's just got it in for the banks. On my charts, all 4 major banks triggered sell signals today. So first day of going from uptrend to downtrend.
And listed law firm Slater Gordon is to raise $40 million in equity towards the $57 million purchase of Queensland's Trilby Misso lawyers. How have investors reacted to that one?
Well, pretty well, actually. They've said it's going to be earnings enhancing straight away. It is quite a big acquisition for them. 57 million, their market cap's 172 million, and they're raising 40 million. The price is 140. They'll be issuing shares at price now is 154. It did go up. You know, the track record of lawyers in the global financial crisis, or Slater Gordon itself, was actually pretty good, quite a defensive stock. It's going sideways. People quite like the announcement. They've got a reasonable history of absorbing acquisitions. So, yeah, all pretty good, really.
Marcus Padley, thanks for talking to Lateline Business.
My pleasure, Ticky.